Well, hi there. So in this video, we're going to do some practice with inflows versus outflows and the current account versus the financial account. So let's get started. Okay, so the first section right here is really just saying from the US's perspective, how would we record these transactions in the current account or the financial account, right? That's what this is. I didn't give you any neithers, so we can take that part off, and whether that would be an inflow or an outflow on that particular account. So an American student studies and pays tuition at a university in Australia. So first off, we know that that's an outflow of funds from the United States. And the buying of tuition at a university is a service, and that would count as net exports. Net exports are part of the current account. Number two, a German telecom buys microprocessors from an American company. So again, that's going to be an inflow because the money's flowing in, but this one is also net exports, right? Goods and services. So it's part of the current account. So to finish that thought, an American bank buys Japanese stocks on the Tokyo stock market. Well, that is going to be an outflow from the United States' perspective because money's flowing to Japan, and it's recorded on the financial account because it's a stock. An American doctor sends money to her family in Ghana every month. That's a transfer, which is one of the three categories of the current account. Remittances and transfers are essentially what happens when we're doing net exports, but you don't get anything in return. It's just like, here you go, have some cash. And so this would be an outflow from the US and an inflow for Ghana, obviously, and the current account, right? It's just flowing funds at that point. The American company Walmart earns profit from its stores in income, or from its stores in Europe. That's an inflow to the US, and it's on the current account because profit is part of factor income, wages, rent, interest, profit. Number six, the US exports and sells cars to Canada. That's an inflow because we're receiving the money. Canada's getting the cars, and it's a net export, so it's current account. Brazilian company buys an apartment building in Boston. The money is flowing into the United States, and real estate is on the financial account. The Central Bank of China buys a US Treasury bond. Again, money's flowing into the United States, and in this case, it's another financial asset. It's a bond. The US imports oil from Venezuela. This one's tricky. We're buying the oil, which means our money is flowing out. And that is a net export, so it's current account. The American company Pepsi buys land in a factory in Mexico. They're buying real estate, so we know that it's the financial account. And we would also know it's an outflow because the money's flowing to Mexico. Number 11, an American businessman is paid dividends from a French company. So the American is receiving money. That's an inflow. And it's income, so it's the current account. Belgian InBev purchases American company Anheuser-Busch. So that means the money is flowing into the United States because in order to buy the whole company, they actually had to buy all the shares of stock. And so we would say this is a financial account transaction. For number 13, it's more of a scenario. Suppose the U.S. increases its tariffs on Canadian lumber. How are the following affected? We know that the price of lumber would increase because it's a tax on that particular good. Based on that, if the price is higher, we know that U.S. imports would decrease. And if U.S. imports decrease, then the U.S. current account balance moves to surplus, while the U.S. financial account balance moves to deficit. So hopefully this helped you with a little bit of practice related to inflows, outflows, and the current account, the financial account. I'll see you next time.